All right. Thank you guys so much for jumping on the call. My name is CJ, CEO and founder of an educational platform called Pivot to Profit. Our main goal is to help traders learn about the Forex markets while also helping them create their own personalized trading strategy. I firmly believe that there's not one strategy in the world that's going to make everybody the most profitable trader in the world, because everybody looks at the markets differently. Everybody's on the markets at different times, trading different time frames. So you got to find something that works for you. However, there are certain basic fundamental and technical skills that you need to learn before you can develop your own strategy. So we also teach that stuff as well. Today, we're going to be going over some of that stuff as well, with the topic of the day being history repeats itself, so do the markets. And just to show you guys that, I'm pulling up GBP USD on the charts right now. And over here, this is basically the first price that TradingView will show on the markets back in like 2001. We see that the markets rallied all the way from, I would say, 1.44, 1.45 area, all the way up to 2.1. And then from there, we rallied all the way back down. All right, so I went ahead and I marked our highest and our lowest areas. And then I dropped us down a time frame. So let's go ahead and bring this down to the weekly time frame. I can show you guys a couple more areas of interest that we're going to be looking at as we start replaying the markets out. So now we'll go ahead looking at the markets, get a little bit more details on the weekly chart. Now we see we have this push right here. We come back down to that same level. And this area right here, we had a push and up and consolidated in this area. We broke up here, retested this level here before making it up to here, broke down, retested this level right here, and had a short pause in the market right here, as well as right here and here. So these are good weekly zones in the market that we can look for the market to repeat itself and have reactions at these zones again. We can see that the market started here and rallied all the way up, and now we've rallied all the way down. And if we look now and we kind of zoom into where the market is right now, well, what the heck is going on right here? We see one rejection, two rejections on the weekly time frame already, which is a good sign that the market is going to have a little bit of a turnaround, because this shows us that buyers are starting to place their orders again at this previous all-time low in the market, over at about 1.44780. About 1.45, which is a psychological zone that we teach in our Forex course, and our Forex webinars. So another good hint there to make sure to learn about psychological zones in the market. So let's go ahead and take this to the daily chart, and we're going to start playing this out and show you guys exactly how what I'm talking about when I say the markets repeat themselves, just like history. And if we could get the levels to show on our daily time frame, that would be beautiful. Looks like not, so we're just going to play it from our weekly time frame. Should show everything just about the same. All right. Let's see. Wow, our levels are gone. Give me 1 second to see what the heck is going on. All right, so let's go ahead and mark these zones really quick again. Lows over here from our monthly time frame, and our mid-range zones we have right here and up here. Let's go ahead and show you guys how these markets are going to play out. So played it out a little bit. The markets are still holding that area very, very well. And now, as we can see, the market's starting to see a lot of buy pressure at this level. Let's see, we get a little bit of a spike down. This is what we call volatility wicks. That what this does is clear out a lot of orders that people are already trying to buy at this previous level, clears them out, hits their stop loss, allows brokers and other people to grab big amounts of liquidity. And now look, we see one rejection, two rejections, and we are ready to take off in this market from what it looks like. Speed this up a little bit. And right here, so this is where history repeats itself, and we will see this happen all the time. And traders say this all the time. They go ahead and they see, oh, well, I marked out my zone. It was at these all-time lows, and I went ahead and took buys here, and my stop loss was here, and I was targeting here. I had good risk management. Everything was great. What the heck happened? And I got my stop loss hit. Well, we can't predict this happening, these volatility weeks where prices force sold to the downside, but then coming up. But what we can do is say, all right, well, brokers and big institutions and a lot of people like that were able to manipulate the markets, get liquidity so they could place their buy positions down here. But now what I can see is that this market is starting to uptrend right now. All right, we can go ahead and mark out these zones now and say, all right, well, we had some rejections here, but overall it was consolidating. We didn't really have direction. But now what do we have? We have a trending market, a push to the upside, failed to make a new low. Now we have a push, a pullback, and another push. So if you were to go ahead and say, all right, well, yeah, they got me over here because I tried to predict the markets. But now I'm going to go ahead and follow the trend of the market and use the fact that we already know that this is a previous low in the market. We already know the market has had a significant reaction here. We've slowed down. We've stopped this super fast drop that we've been having for about the whole year in the market. And now let's go ahead and try to take this up to the next zone. All right, we get a good risk to reward ratio, 5-to-1 risk to reward. All right, and let's see what happens. It pushes right up. And there we go. And notice that right here, that we get this rejection. And this is why I targeted this area right here, because look at that, this random bullish candle right here. This shows us that right here in the market, in this price zone, that we're going to have change in directions. We're going to have people trying to buy and sell into the market in this area, manipulate price, move price in one direction or another. So we want to make sure to target those areas so that we don't miss out on profits and end up having our take profit not getting hit. So I go ahead and I always target areas like this that I see in the market, even though we might have a zone a little bit higher, because it keeps me safer and allows me to hit my targets easier. But history is going to repeat itself over and over and over again. As you see, we just marked some basic zones in the market. We can go ahead, now that we have some more data, well, let's look here. We see this, once again, a random green candle in this whole bearish weekly push. And what happened here? We have another break and retest to where traders, if you were late into the game, well, guess what? All that matters is that you get a 2-to-1 risk-reward ratio. That's all that matters. You get a 2-to-1 risk-reward ratio and that you're not entering into the market late. So if you would have entered on that pullback, and even if you waited for a bullish confirmation, great. And we're not even using multiple time frames. We get more than a 2-to-1 risk-reward ratio. Now let's see what happens. All right, so here, what happened? Over here, if we would have entered, we would have been 716 pips in profit, right to that point. Like I said, we marked this candle right here. It's very important. And that served as a ceiling. Now, once we see one rejection, two rejections, well, now look what's happening. History is repeating itself. We're changing direction. Let's go ahead and look where it's done this before in the markets. All right. Let's go up here. What do we see? We see a huge push to the upside. Now what do we see? Rejection, rejection, rejection. Lower than this one. This one's higher. Comes back down, pushes back up. Well, let's look right here. We pushed, we had a rejection, came down. Came back higher, pushed down, then we have another rejection. So what are we forming right here? We're forming a level of resistance right here for price to push back down. Now, are we going to try to go against the trend in the market? No, we can go ahead and mark another zone where this market might come to. And look at this random bearish candle. I firmly believe in going and always trading with the trend. Now, there's different methods to doing this. We can go on a lower time frame and absolutely short this as well for those of you guys who like to take both sides of the trade. But we're overall still in a bullish market. Why? Because we have right here an impulse move right here. This is our first push. Now we're looking for an exhaustion. These are all-time lows. We never expect the all-time lows to be broken in the market. If we look at super big picture, yes, we're still in a downtrend because we have high, lower high, and a lower high again. respecting this level, but we're expecting a potential reversal right here because we're at previous lows. So let's see if that plays out. And we see right here, we're having a very hard time breaking that zone. Continues to play out, continues to play out. And what do you know? We come right down into this level right here before price starts to come back up. We're at previous lows again. And look at that. You need to be patient with this. And what are we seeing right here? Right here is exactly what I'm talking about. Similar to what we did over here to get that winning trade. We noticed rejection from our previous lows, a push and a retest. Well, what do we see right here? We see rejection from our all-time lows, a push and a retest, and now bullish confirmation. All right, we can take buys all day, and this is looking at the weekly time frame. We can go to the daily and the 4-hour time frame and tighten our entries even more and be able to have tighter stop losses, better entry points. But I'm just showing you guys one time frame, keeping things super simple for you guys. And let's just take it back to our previous highs. We don't even have to go too far. Why? We have a 2.5 to 1 risk reward ratio. Let's see what happens right here. All right, we bounce around in this area a little bit. And bam, took a little while, but we did hit that point. All right, we can never predict how quickly or slowly the market's going to move. That's going to depend on way too many factors for us to try to predict how quickly. But we can easily predict. I won't say predict, but we can watch price action and say, all right, well, this is how the market's moved in the past. Now we're going to go ahead and bank on it moving the same way in the future. Is it going to work every single time? No, I never expect the for us to be able to react to the market with 100% accuracy. But here's the good thing, and here's the great thing about the Forex markets, is that you don't need to be 100% accurate. Let me show you why. We can go ahead and take 100 trades, right? We take 100 trades. Now, we go at a 2 to 1, like I've been saying this whole time, risk-reward ratio, which means that if we risk $100 for every trade, or let's take this away from dollar amounts because it's all going to depend on how much you invest. But we risk only 1% of our trading account to make potentially 2% of our trading account on every single trade. All right, so this is what we're doing, what's happening on our losses. We lose 1%. So if you got a $1,000 account, you're losing $10. If you have a $100 account, you're losing $1. If you have a $10,000 account, you're losing $100. But on our wins, we're winning 2%, right? And we take 100 trades. All right, now if we have only a 40% win rate, which means that we're still losing more than we're winning. Even if you only have a 40% win rate, what does that mean? You have 40 wins with a 2% gain on each win. All right, 2% gain, that means that you have 80% total gain on your account. Oh. 80% total gain on your account with 40 wins. Now, we lost in this scenario with a 40% win rate, 60 trades. So 60 losses at 1%, which means that we lost 60% of our account worth of losses. Well, that means that on 100 trades, you are still netting a 20% ROI gain on your account. And that is losing more than you're winning. That's a very important thing because you're always shooting to win more than you're losing. You're always shooting to have around a 60 to 70% win rate is amazing. All right, 60 to 70% win rate, awesome. You'll see all these gurus out there telling you that I found and I tricked the markets into making it 80, 90, 95% win rate strategy. All right, I call BS, and if they do, they're also most likely take into account that they're only at a 1-to-1 risk reward. Those are the people that'll go, oh, I'm doing a 10 pips and dip. I'm going and taking 10 pips out of the market, risking 10 pips, and we're going to see how it goes. Well, guess what? If you have a 90% or let's say an 80% win rate, right? You have an 80% win rate, which is extremely hard to do, but you're only winning 1% and risking 1%. And that means that you have 80 wins which is 80% profit on your account and 20% worth of losses on your account, because you have 80 wins and 20 losses, which means that your net profit is 60%. That's with an 80% win rate with a 1-to-1 risk-reward ratio. Now, how can we make life easier and make you not have to worry about having to win 80% of your trades? Well, we go to a 2-to-1 or a 3-to-1 risk-reward ratio. With a 2-to-1 risk-reward ratio, now we go and let's say we win 50% of our trades. That means on 2%, we get 100% profit because we won 50 trades times 2% per trade equals 100% ROI, gross. Now we have 50%, 50 of our trades are losing times a 1%, and now we have 50% loss, which gives us a net of 50% profit. Now, would you rather have to worry about being 80% profitable or 50% profitable to win 50% versus 60? And we could change this to about 60%, and that automatically gets us way over, because that makes us 120, 40, 60, 40%, and now we are at 80% net profit, which means that just with a 60% ROI, I'm making more money than that guru that's telling you, hey, we're winning so much over here, we have an 80% win rate. Well, what they're not telling you is that their risk to reward and their strategy there is all jacked up. I can make more money winning 60, 50% of the time, even 40% of the time than somebody who's winning 80% of the time, just based on my risk to reward ratio. Because this is only with the 2-to-1 risk to reward ratio. I can show you trades where we send out and we have 5-to-1, 6-to-1 risk reward ratios that actually play out. So it's not all about being right all the time. We can take losses often. We just need to go ahead and put ourselves in positions to be able to win often, and only take trades when the markets are in the right conditions and give ourselves really good risk to reward ratios. So once again, history repeats itself. So we're looking at these markets again. We have these zones marked out, and the market's going to continue doing the same things over and over and over again. All right, look at this right here. We came right back to that zone once again. And now what are we doing? We're having a retracement back to the downside. All right, what did we do over here? We came back up to this high, which means that we're making a lower high. We're most likely probably coming back down. Come back down, came right back to that zone. Now let's see what happens here. Right here, this is a very important time. Price pulls back, and look at this. We have not one rejection, 2 rejections, and a pullback right here. Very quick, right to this level right here. Now let's go back and look over here. We have 1 rejection, 2 rejections, and let's go ahead, take this away, and a pullback right to that mid-level right there, where we see some rejections during this 1, 2 rejections. And what happened? It pushed all the way up. Now let's see if the same thing happens again over here. And I bet you it does. And I'm willing to go back up to this target. And we can go ahead and also target here as well, potentially, as long as we get 2-to-1, which we do. Once again, 2-to-1. We don't even have to take as much out of the market. We just need that 2-to-1. 3-to-1, even better. But the less you ask from the market, the higher off your chances of winning are. So right now we came back down to those lows. However, look at this. 405 and 405. When we're at 1-to-1, we're looking at putting a break even. So look, we didn't win that trade, but we didn't lose either, because at 1-to-1, we're going ahead and we're going to bring stop losses to break even. Great day. We've used back testings all the time, and history is going to repeat itself over and over and over again. Okay, so we did get that same reaction where we pushed up at that same level. It doesn't need to always be all the way up to where you want it to be, but the point is to get in the right direction. All right, I'm showing you guys live. This is all the way back from 2013. I didn't go on this webinar saying I'm just going to find the perfect scenarios for myself and just show myself winning every single time, because that's not being real with you guys. I'm showing you guys how I would normally back test in a market. Look, once again right here, we had a rejection from this zone. what do we have? We have this pullback retesting the zone. Well, if history repeats itself, we should see this continue back down to previous lows. Now let's look over here. Where did that happen before? Where have we seen something where we have a sharp spike to the downside, a small impulse, a small pullback, and then it continues down exponentially? Right here, sharp push to the downside. We pull back a little bit, and then boom, price comes right back down. And we pull back where? Right back to that previous zone that we had marked. So that's another indicator. Price is going to always continue to do the same things over and over and over again. All right, let's look at this. What do we say? Look at this level right here. Bam. Look at these drops every single time. Price is respecting these zones. I'm not doing some full analysis on here to actually take trades. I'm showing you guys different patterns in the market where history is repeating itself and markets are doing the same things over and over again. Then we can go ahead and do a full analysis on the markets to be able to make money. Once again, look at this. Look at this right here. Another time, this is what the fourth example that I've shown you. 1, 2 rejections. We pushed up and had that slight retracement to where we could have taken advantage right there. How many times do we have to show examples like this? 1, 2 rejections, pushed, and then we had that retracement. Once again, 1, 2 rejections, pushed, retracement. 1, 2 rejections, pushed, retracement, came up. Same thing going the other direction. 1, 2 rejections, push down, retracement. 1, 2 rejections right here, push down, retracement. And then it came right back down. Over and over and over again. All right, different things like that, different patterns like that, we're going to see in the market all the time. And that's the biggest thing to do, is to find in the previous markets what happens all the time in the market. This way we can go ahead and close out of this replay mode, and let's go over to current markets right now. And let's see, just to give you guys some perspective, we were looking back all the way over here in the markets where we were looking in this zone right here. This is where we were kind of looking at and talking about before. Now the markets are over here. But what is something similar with this price action pushing up from here and then shooting back down to this over here? Anybody in the chat box? What is similar to what I'm seeing right now with here and over here? All right, nothing in the chat box. What I see that's extremely similar is that when we mark this off and we mark this previous low, we had price that spiked down and then completely shot up from this level, especially right here, super similar. Let's look right here even. Very, very similar to what price is doing right now. This is how history repeats itself. Look, we have 1, 2 wicks that pushed way below this level and the price came right back down to where the bodies of these candles closed. Now let's go over here. We see where the bodies of these candles closed. We have wicks that are pushing down lower, but price is coming up right from those bodies of those candles. This is the monthly time frame. Now let's bring this to the weekly time frame. All right, very similar. Once again, the 1, 2 rejection, and then we bring this to the daily. And how many times have I showed you guys this just on this webinar? All right, it happens over and over and over again. And there's fundamental and economic reasons why this happens. This is just simple people reacting to price. Initial buyers jump into the market, they rally the market up. All right, but people are trying to go overall with the trend. So what do they say? They see a retracement, so they try to short the market. It comes back down. Well, no problem. This just gives institutions and buyers a chance to buy back in this price zone again. So they go ahead and they influx the market again with buys because they want the market to go up. They overpower the sellers and the market reverses. But what's happening here? Well, people are taking profits at this previous high. So what happens is this little stutter in the market, and this allows the markets to continue to push higher, and that's what we're seeing right now. This is what we were able to capitalize on last week and get over 300 pips into the market. I'm going to show you guys right now. Let's go ahead, new share. And let's show you guys. We go to our Telegram chats, full transparency. We don't win all of our trades, but I am going to show you how right here. See, we lost on this trade, won on GBP CAD. This is GBP USD. This is how we were able to capitalize on this last time. We took buys at those previous lows, and then exactly how I showed you, we saw that break in structure, that retest, that little stutter right there, and we're able to take another buy again. We see 382 pips right here, 84 pips on that first thing. Why? Because we're just banking on history repeating itself. And we don't need to be right every single time. We need to be right about 60% of the time. So I can be wrong. Actually, we only need to be right less 40% of the time to be profitable. So you're right 60% of the time when you're doing very, very well. So I don't even need to be right more than I'm wrong. I just need to keep doing the same thing over and over again, knowing that history repeats itself enough for me to be 40 to 60% accurate and make some good money in these markets. This is not about trying to show off to all of your friends that you're right all the time, because nobody knows where the market's going, bottom line. Anybody who tells you that they know for 100% certainty where the markets are going is lying to you, and they're just trying to take your money to buy their course, and they might not even be a profitable trader. The real traders that you talk to anybody out there that's very good, and they're going to tell you, you don't need to be right all the time. What you need to do is focus on your risk management. You need to focus on following your strategy and sticking to your plan. All right. And I found that with price action, you see that I don't have any indicators on my charts. I don't use any indicators on my charts, because price action and how price moves is so repetitive that we can take advantage of that over and over again. Look right here, 1, 2 rejections, push, we get that stutter. Once again, let's go ahead, look right here. We get that stutter, price comes up, comes back down. History repeats itself over and over and over again. Where did we come up to? Previous highs. All right, over and over and over again. And we can go the same thing over on sells. 1, 2 rejections from the upside. We get that stutter right there. The price slows down, retests. We get price action confirmation, and look at how far we went down. Now, we don't need to ask this much from the market. It's great if you can start to get those 6, 7, 8 to 1 risk reward ratios, but all we need to ask from the market is that 2 to 1 risk reward ratio. The less you ask from the market, the better, because now you're in and out of the trade. You don't have to worry about huge spikes in the market knocking you out. All right, we get those 2, 3 to 1, 4 to 1 risk reward ratios, and literally you only need to be 30 to 40% correct to stay profitable. And once you're 60, 70% accurate, now you're extremely profitable. And this is all just showing you one basic pattern in the market. Now, there's multiple other patterns that we can show you and teach you that are going to be profitable and repeat themselves over and over again. But this is one that's just super simple and does it so many times in the market on every single time frame that you can make money from it over and over and over again. Look right here. We have 1, 2 rejections from the market, a push, a retest right here where we stuttered. We came back to this level right here. And what do you know? Price came up right back. Now, this is what I'm talking about. We're asking too much of the market. Because if you targeted previous highs thinking this was going to reverse, and you're like, oh, well, I have potential, it's done it in the past, I'm going to get 8 to 1 risk reward ratio. Instead, if we just go and try to get 2 to 1 right here, we target this previous high right here, super easy. If you wanted to try and go for a 3 to 1, hold half of your position even longer, then we still get it. And what is another thing that we've shown you about 7 times this webinar is these random candles that don't match with the overall direction of the chart. This is manipulation in the market where people are closing positions and there's a lot of pressure in the market. So, because it takes a lot of orders right here when the market's basically in free fall to stop it from moving down and to have it push up during that day. So this is a whole day of price action. Price action is just tanking. And for some reason at this level, price stopped tanking before it started tanking again. That means that this is a very important price level. And why is that? Because we just broke this structure right here. We broke this structure. People's stop losses got hit. All right. People are closing out of their positions. There's uncertainty on where the market's going to go. Retest traders are waiting for the retest. All right. So there's several reasons why this occurs, and we won't go into the fundamentals of it too much, but I just want to show you how repetitive it is the price reacts to these random bullish or bearish candles that are in the middle of a trend, because this is momentum, and this area stopped the momentum completely. So we can count on price coming back to that level and no momentum stopping. And what does this turn into right after that momentum stops and we finish that buy? 1, 2 rejections, and that retest right there to where price came right back down to our previous lows. Over and over and over again. All right. This is what I'm talking about, where history repeats itself, and you just need to find the patterns in the market that are repetitive and study how the market repeats itself, which thankfully we've already done, and we can show you these patterns that repeat itself. That's why I'm showing you so many times just these couple things that repeat themselves. There's many more, and this is how you become more and more profitable in the markets. That's mainly what I wanted to go through in this webinar. I want to open it up for Q&As. So if you can go ahead, go to the chat box. Let me know any questions that you guys have. If you have no questions, I'd really love some feedback. If you guys enjoyed the webinar, if you guys learned something new from this webinar, just drop whatever you want in the chat box and we'll go ahead and respond. While we're doing that and waiting for you guys, I want to just give you guys some different resources that you guys can use if you like the way that I teach. First, we have a YouTube channel. So you guys can go ahead, go to our YouTube channel and watch some of our previous videos teaching you guys different strategies on price action, market structures, different things in the market that are going to give you a lot of free value. All right. We also have a podcast. All right. This podcast is called Pip Talks. You can look it up on any podcast platform. You can look it up on Apple Podcasts, Google Podcasts, Spotify, SoundCloud. Right here, I just pulled it up on Stitcher just by Googling Pip Talks by Pivot to Profit, and it'll come right up. This is something great for you guys to watch while you're at work, on a drive to work, and give you different psychological tips and tricks to help you be a more profitable trader. This isn't going over technicals because there's no charts in front of us. It's just, a podcast. So instead we go into one of the most challenging things in trading, which is making sure that your psychology is on point when you're trading. So it's all over here. We have some guest speakers talking about cryptocurrencies, how to grow your accounts, etc. So make sure to go ahead and check that out. And lastly, this is some of the things that our students get access to. They get access to about 20 plus videos, pre-recorded videos, all teaching different things that I've been talking about with you guys today. Fibonacci's, these are all different things to help you identify these repetitive patterns in the market. On top of that, they're going to get my watch list, showing people what I'm looking for in the markets. They're going to get that Telegram link that I showed you guys that gives them ability to ask questions, get on our live webinars like the one that you guys are on right now, except instead of 1 time a week, it's 3 to 5 times a week, as well as see all of these different charts that we update every single day and answer students' questions. So the whole point of this is to give you guys as many resources as possible to make it the highest probability that you become a profitable trader. Now, do you need to put in work? Of course. This is not something that you can just sit down and get a notification on your phone and make money from it. Honestly, people who have tried to make systems like that, it never works, and I never will trust them because there's too much psychology involved in trading to be able to do that. So I truly think that you guys need to be able to learn the skill set if you guys want to make real money from the Forex market. So if you guys want to learn, you guys are committed to learning, this is a great opportunity for you guys to learn. Might not be your fit. You might not like how I teach. Perfectly fine. We also have 3 other educators that work with us that you can learn from them as well. If you guys are interested in any of that, make sure to let me know. I really appreciate Josiah, Jeremy, for dropping those comments that you really enjoyed the webinar. I don't see that there's any questions. So I want to thank you guys all so much for jumping on this webinar. Any of you guys that were on this webinar all the way to the end, just so you guys know, send me a direct message on Telegram, Instagram, or Facebook, and we will hook you guys up with a special offer if you guys want to go ahead and join our course. We'll give you a free 30-minute consultation as well. This video will be uploaded to YouTube as well, so if you guys want to let any of your friends watch this as well, you think that there was a lot of value, you want them to check it out and learn exactly what you guys learned on this webinar, make sure to send them the link to the YouTube video. I'll drop it in the free channel in a couple hours once it finishes uploading. Thank you guys so much. Have a great weekend, and I'll see you guys on the charts this week.